Hello, thank you for joining me in the webinar today. My name is Louis Green. I'm a chartered financial analyst, certified financial planner, certified private wealth advisor. I wrote a book on retirement planning. That book can be downloaded for free at 5stepsToRetirement.com. If you have any questions or want a copy of the book over email, please email me, louis.green@savvyadvisors.com. You can call or text me, 917-590-0552. I'm happy to set up a complimentary consultation. Please feel free to share that information with friends, family, and coworkers. Let's get started. Here's the agenda for the webinar. I'll spend about 25 to 30 minutes presenting. I'll start with a brief introduction to my practice. I'll spend some time on the 5 topics in the book: financial planning, investment planning, tax planning, estate planning, lifestyle management. I'll wrap things up and tell you how to keep in touch. Please note, we do not provide legal or tax advice. Please reach out if you're looking for an accountant or attorney, as we have a network we might be able to share with you. Here's a brief introduction to my practice. My practice sits between financial planning and investment management. I believe that a comprehensive financial plan is the key to managing wealth. I pride myself on being easy to talk to. My approach partitions clients' assets based on their short, medium, and long-term goals to help keep them aligned with their personal financial situation. Growing up, I was inspired by my father, who was an accountant, and seeing the impact he made on his clients' lives. I earned my MBA, and I pursued further education, including the Chartered Financial Analyst, Certified Financial Planner, and Certified Private Wealth Advisor designation. Let's move on to financial planning. Financial planning really is the blueprint for your retirement. I'll share an example, a sample financial plan as well, and provide some tips for you. Now, here are some of the items you should consider in your financial plan. Start with having a written financial plan. I'll share a summary of a financial plan in a couple of minutes and set retirement goals as part of that plan. This is going to allow you to determine where you're at, where you need to be, and what steps you need to take to get to where you want to be. Create a budget, actually write a budget down and a savings plan. It's going to provide you with discipline you need to set aside enough money each year. If you're saving every year, you might start to take advantage of what's called compounded interest, which is interest on interest over time. That can be very powerful for you going forward. Be mindful of your retirement accounts. I shared a couple of examples earlier. Do your best to maximize those contributions as long as that's within your risk tolerance. I'll share what a risk tolerance is in a couple of minutes. Address sequence risk. Sequence risk is the risk of a big market decline right before or right after you retire. Most people are concerned more with risk than anything else. It's a big concern for many people. We address sequence risk by creating goals-based portfolios for our clients. Address Social Security. So be mindful of different amounts you might be able to get monthly, depending on the age in which you claim Social Security, and have a plan for Social Security. Manage debt. If you have a high interest debt, be mindful of the impact of that debt on your retirement plan. I'll share an example in a couple of minutes as well. Consider having a sample financial plan. This is a summary financial plan from eMoney, which is software that we use and I work with some of our clients. As you can see here, it does a nice job of really breaking out the plan. You have your living expenses, current and in retirement. You have your different sources of income. You have your balance sheet, your assets, your liabilities, your net worth, the asset allocation, the equities and fixed income mix, as well as projected returns and risk. It also does a nice job of providing a probability of success. Now, again, you might not be able to do this with a plan that you have on paper, but there is software that you can purchase. And if you're working with an advisor, consider having them create a financial plan for you. Have a plan for Social Security. So be mindful of your monthly benefit based on your claiming age. So let's take a look at a sample client here. Let's say she received Social Security at the age of 66, so she could receive $1,000 a month. If she waited until the age of 70, she could receive $1,320 a month. That's a 32% increase. When we work with our clients, we help them optimize their Social Security. There's definitely software that we can use and the software that's available to you. But be mindful of the different benefits and coordinate your Social Security benefits with your living expenses and your financial situation overall. As you can see, it can make quite a difference on the income you receive each year. So have a plan for Social Security and open up an account with a Social Security as well. If you have a lot of debt, be mindful of the negative impact that debt might have on pursuing your retirement goals. Here we have 2 examples. We're looking at $15,000 credit card balance with a 20% interest rate. Example number 1, clients paying $300 a month. Example number 2, clients paying $600 a month. As you can see here in the top left, example number 1, clients paying that debt off in 9 years and 1 month. Total interest paid is over $17,519. Example number 2 takes the client only 2 years and 9 months to pay off that debt. Total interest paid is a little over $4,500. So that's a big difference. So that's money that can be better used to pursuing your retirement goals. Have a plan for your debt. When we work with our clients, we help them reduce their debt by having a plan for that debt as well. Withdrawal rates. So many of the clients that we meet with ask us to determine how long their portfolios might last after they retire. And they want to know what are some of the factors that might determine that. And we tell them asset allocation, market outlook, economic outlook, but also the amount of money you're withdrawing from that portfolio on an annual basis, aka your withdrawal rate. Here we have two sample portfolios. We're looking at 50-50 portfolios, meaning 50% stocks, 50% bonds. Portfolio number one in purple has a 4% withdrawal rate. Portfolio number two in orange has a 5% withdrawal rate. Both portfolios start at $1 million. As you can see here, the ending values are quite different. Portfolio number one, in which the client is withdrawing 4% per year, has an ending value of 1.571 million. Portfolio number two has an ending value of 991,000. So be mindful of your withdrawal rates when you're structuring your portfolio and when you're considering your retirement plan. And we do the same in our work with our clients. That's the end of the presentation. As I mentioned earlier, please feel free to reach out to me if you have any questions. You can email me at lewis.green@savvyadvisors.com. You can call or text me at 917-590-0552 if you'd like a copy of the book. Go ahead and navigate to 5stepstoretirement.com/ebook or email me for a copy of the book. Thank you for attending the webinar. I hope everyone has a great day.